A significant number of individuals remain unaware of this reality. However, the Internal Revenue Service will actually compensate you for making specific investments. And no, I'm not referencing fundamental options like contributing through your individual retirement account or your 401k or even a health savings account. I'm referencing investments that actually have zero caps and will enable you to minimize your taxes by whatever amount you are prepared to invest. Right now, I'm going to reveal to you the investments that the wealthiest individuals on the planet utilize to settle the smallest sum of taxes. And it begins with grasping the strategy that they utilize to leverage the framework. The reality is that you can either contribute into the framework every single year or receive compensation by it by simply investing into options that are already incentivized in the tax legislation. And the incentive is tax reductions. These are funds that you can place back into your wallets or utilize to construct more prosperity while minimizing your biggest expenditure, taxes. These two elements together can assist the typical individual construct explosive prosperity. And right now, I'm going to reveal the leading methods to actually achieve this as a working certified public accountant that tax strategizes every day at mycpacoach.com. So let's begin immediately. All right, initially you must grasp that every single tax advantage in the legislation exists because the administration desires something. They desire employment opportunities established. They desire residential properties constructed. They desire power generated. And more significantly, they require individuals to actually perform these activities. And whenever they desire something intensely enough, they compensate for it in the structure of tax write-offs, tax incentives, and even tax-exempt treatment on your investments. So, the strategy isn't about defrauding or dodging taxes. It's about performing what the administration is already compensating individuals to perform through various tax rewards. And I'm going to review the leading 3 categories where you can access these rewards to make this all achievable. Beginning with number 1, commercial investing or launching a small commercial enterprise, even if it is simply a side venture. So, without question, possessing a commercial enterprise is the greatest tax advantage in our nation. It's actually one of the quickest methods to construct prosperity. It establishes employment opportunities and it strengthens the financial system. If you take a period to consider some of the wealthiest individuals on the planet, I am prepared to wager you that they likely possess a commercial enterprise. And from the administration's viewpoint, they particularly require small commercial enterprises. Almost half of all employment opportunities in this nation is established by small commercial enterprises. So without them, we would be in significant difficulty. Joblessness would increase dramatically. So here's the arrangement. The administration subsidizes commercial investments. When you invest funds into a commercial enterprise, those funds can be tax deductible and even qualified for tax incentives depending on how those funds are being utilized. And this can be accurate when you launch a commercial enterprise, invest into an existing commercial enterprise, or even when you purchase a commercial enterprise. For instance, one of the biggest corporations on the planet, Amazon, settled zero government income tax for years despite generating millions of funds because they made calculated investments into their commercial enterprise that ended up neutralizing all of their revenue. They purchased enormous quantities of assets and machinery like their personal offices, storage facilities, servers, machinery, and even transportation vans that you've likely witnessed previously. They invested in investigating and creating all various kinds of products and offerings. And even though these investments generated enormous returns for them, it also resulted in minimal taxes being owed due to various regulations in the tax legislation. They obtained depreciation write-offs, research and development tax incentives, and additional benefits. They synchronized how they constructed prosperity with the tax legislation. And virtually anyone can perform this in a method that creates logic for them. For instance, let's simply begin small and state you're considering launching a commercial enterprise. Well, immediately out of the entrance, the administration enables you to deduct up to 5,000 funds of expenditure you accumulate to investigate and explore a new commercial enterprise, and another 5,000 if you determine to establish and structure it. It's named the Startup and Formation Expenditure Write-Off. And even if your commercial enterprise never generates a single fund in revenue, you can still claim these write-offs as long as your commercial enterprise legitimately initiated. And that's simply the commencement. Small commercial enterprise proprietors also receive an additional 20% write-off against their commercial revenue with the Qualified Business Income Write-Off. So, as your commercial enterprise expands, you're actually preserving more funds in taxes than you would generating wages or other kinds of revenue. And we haven't even arrived to the optimal aspect of the arrangement yet, tax write-offs. Most individuals settle taxes on their total revenue, but commercial enterprise proprietors settle taxes on their remaining revenue, which is revenue after deducting every single expenditure connected to managing it. So elements like promotion, publicity, machinery, applications, specialist charges, and so on all come off the summit and minimizes the quantity of revenue that you will have to settle tax on. You can even deduct significant portions of everyday expenditures you likely already have, like residential properties, transportation, journeys, dining, and additional when those expenditures have legitimate commercial purposes. And honestly, these are all very fundamental write-offs. When you really begin mastering this, you recognize that you can actually control your taxes by carefully determining how you distribute your commercial revenue. Simply like we witnessed with the Amazon illustration, you can invest your resources into various expansion tactics or revenue transferring tactics, pension preparation, and so much additional to enhance your prosperity while reducing your taxes. As you can witness, commercial enterprise possession is a route to leveraging some of the biggest advantages in the tax legislation, but it's not the exclusive method. You can also utilize route number 2, property investing. Property is recognized as one of the greatest tax protections on the planet. When you lease an asset, whether it is a single-family residential property or business asset, you are in the commercial enterprise of property. And the property commercial enterprise is very appealing because not only does property usually increase in value and generate flow, but the administration incentivizes property investors with enormous quantities of tax advantages, with the biggest one being something named depreciation. So, understand this. Even though property usually increases in value in the extended period, the Internal Revenue Service enables you to deduct depreciation as a non-monetary expenditure as if the asset will become valueless eventually. And on summit of that, you can combine almost every other kind of lease expenditure you have, like your loan interest, asset taxes, coverage, fixes, and even your asset supervision charges. By the period all of those write-offs impact your filing, most investors document minimal to zero taxable revenue on their lease, even when the asset is producing positive monetary flow in actuality. But here's where it becomes extremely influential. So through a procedure named expenditure separation, you can hasten the quantity of depreciation you claim and preload enormous write-offs in the initial year of possession of a lease asset through additional depreciation in Section 179. For instance, on a 1 million fund asset, you might be able to produce over 200,000 funds in additional write-offs in 1 year exclusively with an expenditure separation analysis. For some investors, this write-off is bigger than their complete initial payment on the asset. Even if you finance the complete asset, you can still claim 100% of the depreciation. The Internal Revenue Service does not consider where you're obtaining the funds from to finance elements like this. You can actually utilize obligation to purchase property, construct ownership, obtain against that ownership tax exempt. And when you're prepared to transfer, you can simply perform a 1031 transaction to postpone your investment gains indefinitely. Like I stated, actually one of the greatest tax protections on the planet. And individuals simply repeat and continue with this tactic for periods to effectively construct tax-exempt prosperity. But beyond this, there's one other investment that has some of the biggest tax advantages on the planet, which is route number 3, power investing. The complete planet operates off of power like petroleum and natural gas. Because power is mandatory to move most products and offerings, an increase in power values would make almost everything more costly and can even trigger a major financial downturn. So to avoid this, the administration desperately requires domestic petroleum and natural gas generation. So what do they perform? They establish bigger and superior tax rewards to motivate private corporations and investors to proceed and perform this. When you launch or invest into a qualified corporation that performs active extraction operations, up to 85% of your investment can be tax deductible in year 1. So imagine investing 100,000 funds and obtaining an 85,000 fund paper deficit on a Schedule K1 that you can then utilize to neutralize other revenue. Well, this is totally achievable with petroleum and natural gas investing and is due to a few major tax rewards. Initially, the intangible extraction expenditure write-off. So, usually intangible expenditure in any commercial enterprise is not tax deductible. But with this regulation, they are for corporations that extract. So when these corporations accumulate intangible expenditures like workforce, power, and other expenditures tied to extraction, the Internal Revenue Service enables them to charge those expenditures immediately. Secondly, similar to property, these corporations can also claim significant depreciation write-offs on their physical resources like machinery, equipment, and even the petroleum facilities themselves. and you as the investor participate in those write-offs. So in very simple language, these investors are able to charge intangible expenditures and physical expenditures, which is actually unprecedented in most kinds of commercial enterprises. Plus, on summit of that, the administration only taxes you on 85% of the revenue the investment generates. The other 15% can be completely eliminated through something named resource reduction allowance. So, not only are you obtaining an enormous write-off proceeding in, but you're also obtaining minimized taxation proceeding out. Like I stated, no other investment in the tax legislation quite operates like this. Currently, unless you're going to begin extracting into petroleum and natural gas facilities yourself, you will probably require to invest with a private corporation that actually performs this. And to be reasonable, those kinds of arrangements are usually designated for qualified investors and do transport real danger. So this is something that you do not desire to perform without appropriate guidance. I would intensely recommend collaborating with a competent certified public accountant and an investment consultant before placing any real funds into something like this. And if you require one, simply request to collaborate with my organization right now at mycpacoach.com.